All right, looks like we are live. Make sure we're live over here. Yep. All right, welcome. Good afternoon, everybody. This is Crypto Picasso, Master Trader Educator for Swipecoin. Looks like we are live. Well, we started about 30 people on here. That's dope. All right. So we're going to get started in just a couple minutes here. Why don't you guys go ahead and put in the chat where you are tuning in from. It's a beautiful Thursday morning, afternoon, evening, wherever you're at. Close out some windows I don't need here. All right, Germany, Trinidad. All right, Germany, Vegas, Utah, Switzerland. All right, West Palm, Germany, London, Costa Rica, Arkansas, South Florida, New Zealand, LA, Ohio. Nice. Georgia, Amsterdam, Switzerland. All right. Virginia, Switzerland, Amsterdam, Ohio, Sarchi, Costa Rica. Nice. That's where they make a lot of furniture, right? Nigeria. Ryan from Philly, what's up, bro? Switzerland, Montreal. All right, welcome, everybody. We're going to get started in just a couple minutes here. I'll show you guys what I see going on with Bitcoin. Kind of look at the analysis for our current trade. Our current trade is up about 100 and some pips, at least over 100 pips. Depending where you got in, the buy zone was between 79.50 and 8,000. If you bought above 8,000, you're in a totally different trade. Yeah, it's really have to stick to the recommended price points to be able to play the market precisely. Clear this off real quick. All right. Dallas, Vegas, Montreal, Switzerland. Martin. 79.48, beautiful, nice entry. Keisha from Philly, nice. Please teach us when we miss the signal, how can we re-enter the pullback? Confirmation for the best entry. Yeah, basically, like look at it like this, right? Just to answer that question real quick. If I'm looking at a 4-hour time frame move, right? Okay, if I'm looking for a 4-hour time frame move, and a bounce from my buy zone right here. Basically, pull this wick down here a little bit real quick. Yeah, so we're looking to buy right about here, right? If I see it turn around in that area and I miss the hour, like the entry on those, basically there was about 16 hours to enter in that zone. If I miss that entry, what I'm basically looking for now is we go back to the idea of how we're watching the progression of price and how we're tracking the trend. So that's when we were looking at lower time frames and like this. Like the scalper should have called a buy this morning and it didn't. So I've already talked to the developer. We should have had a buy called right here because the buy got called at the same time on Ethereum when Ethereum made the same move. Now going back to the 15-minute concept, it's kind of like this. Like if you missed the entry on a 4-hour time frame, we're basically watching for pullbacks now, right? We crossed the 50 EMA here, right? We had a nice push up, and now here we tested it. We're kind of consolidating in here. So The best way to trade this now is if you miss the entry down here, don't want to chase it on its way up over here. We want to see maybe to look for a buy in here, right? See around that 50 EMA. So if you miss the entry, best way to think about it as a general rule of thumb, look on the lower time frames and look for price to move back to the 50 EMA area or move back to the baseline. Okay. All right, let's see. To talk about what the strategy in the scalper is. The strategy in the scalper is a combination of reading averages, 3 different averages, and momentum. So when those things shift in the market in the 15-minute time frame, something's potentially going to go in the other direction. All we have to do is map out our trend at that point and observe the open and close price on the 15-minute time frame. It's a really simple strategy, but it's based around price action. You know, it's like a price action with the momentum type of strategy. Looks like we got about 95 people on here. All right. If it hit your stop profit, right? Well, then if you're playing the market the way that I always recommend on all my trainings is that when I give it, especially for a swing, and I even do this for the scalper, always enter multiple positions at the same price points. So split your risk into 3 to 4 positions, and you got one that has a stop profit that gets hit, and the other 2 are still at break even and have the chance to ride out for more profit. You don't ever want to just open one trade at one price point because then you're stuck and you have to look for another entry. The way that I swing trade is I've realized over the years that the market really only gives you a couple really good entries where you can have flexibility in your trade. I mean, think about it. Where we bought this on the 4-hour time frame, if this gets away from this zone, okay, if this gets away from the zone and starts heading towards 9,000, we're going to look back on this at that entry as the most precise risk, like minimal risk entry right here ever if this thing continues to rally up. But it's only this entry right here that gives you the flexibility to do multiple things with your trade. Because if I enter the market right here, I can have 4 positions and I can put a stop and profit as there's profit, and I can leave the rest of this orders at break even and let the trade run and let the price work itself out and gradually grow. But if I enter the market differently, if I don't enter the market here and I enter the market up here, then I don't have that same flexibility because the market's it's in a whole different risk to reward setup in a sense. Because if I enter the market up here, then if the market falls back down here, I'm at a loss. So I don't take many trades. I take maybe three to 5 trades a week, right? Like swings that we're looking to pull out of the market. But we're looking for bigger moves the market makes. So it really pays to have multiple orders and to always work that strategy of having multiple positions. Because when you have multiple positions, you can do multiple things. You can stop with profit. For instance, for me, all my orders are break even right now. Because the way I look at this move right now is I'm not worried about 100 pips here right now. As this goes a little bit higher, I'll probably lock in 100 pips. But I'm not worried about playing for 100 pips right now because I'm looking at my positioning in the market right here on a grand scale of things in a sense. And this, like for me, this trade right here either has to work out or not. This is a pretty cut and dry trade for me. Like where I'm not trying to scalp this for the 100 pips right now. Like I'm telling people, lock your profit and take your profit for sure. But for me, I'm looking for a bigger move out of this because this is a key pivotal point for Bitcoin right now, where if this holds our entry, this thing's going to go. Like this is opening. This could potentially be the spot where the market completely just turns around and goes well back up into the $12,000-$13,000 range in the next couple weeks. Or it's going to not, and it's going to break down right here and show us there's a great trade to the downside. So it's all about positioning, really. That's why you really want to play the market from a very patient and disciplined mindset, and you really want to flip the market emotions back on itself in a sense, like because when the market gets here, everybody's thinking, oh, that's it, we're going to 7,000, right? So there's maximum fear in the market right here. Not many people are taking the risk to actually buy the market at that point in time, because once it breaks 8,000 again for the fourth or fifth time, everybody like surely thinks that, okay, yeah, we're going to 6,000. So that type of sentiment in the market of of fear, and when the market just looks, it looks horrible. Oh, it looks like, yeah, this could drop to 6,000. You want to read that emotion out of the market and realize there's a probability that this thing is going to flip right here and go back to the upside. So to me, it's all about positioning, and in that positioning, you want to take maximum advantage of that positioning and use multiple orders. Always, always use multiple orders, because then it doesn't matter. Your stop profit gets hit. You got 50, 80, 100 pips for the day, and you got two orders with a risk-free setup where you're already positioned in the market, and you don't have to worry about looking for the next best entry. You don't have to worry about anything else. You just have to let the market do what it's going to do at that point. And then it comes back to how you want to be a trader, right? Are you that kind of trader where you can let profits ride and you feel comfortable with it and watch it grow, or not? Like to literally be like, oh, I'm up $1,000. I'm not, or I'm gonna let that ride out to maybe get 5,000. But if it comes down to 300 again, I'll take it and I'm cool. Like there's a level, there's a balance that you have to play there emotionally as a trader, and figure out what kind of trader you are. Like, are you the kind of trader that can't let a penny slip by, and you're just like, oh, I need all that profit all the time? Then swing trading is probably not for you, because your balance is going to fluctuate off of your positioning in the market, and you're looking for a bigger goal over time. If you can't let profit, fluctuate like that, you probably are, would like binary, really high frequency trading, where you're just in a trade for like 3 minutes and you take it and you're gone. But those type of setups, though, the risk to reward is not as good. Most of the time, if you're in a 3-minute binary trade, you're risking like $1,000 to make $700. So it's not even a one-to-one risk to reward. So you really have to figure out what's your style of trading. How do you feel? You want to be a swing trader, a day trader, quick 3-minute trader? There's so many ways that you can make money in these markets, but it all comes back to understanding what the markets are doing, right? If you have that knowledge, you can use it in many different ways. I could sit here on high frequency and pull money out of the markets every 3 minutes, but that just is tiresome. You know what I mean? Over time, like I like to plant seeds and watch things grow. Plus, I'm already invested in Bitcoin for the last 6 years, so this is a kind of a market where I feel like to utilize the skills of technical analysis, you can win big if you just take few trades at a time. Because when Bitcoin moves $1, that's one pip. This $1 move is one pip. So, this thing's fluctuating thousands and thousands of dollars. So I'm going to go ahead and get it rolling here. We got 117 people in here. Let's see if we got a little bit more. About 124. All right, guys. So we'll get back to some questions there in a little bit. I want to show everybody. Well, first, I just kind of explained it there why I bought the market here, right? Because it looked horrible. It looked like it was going to go to 7,000. It looked like we were going to break support. But you have to understand where we're at. It all comes back to, for me, it all comes back to understanding the emotion in the market. The emotion in the market is the number one thing that I always let guide me. What are the other traders thinking? What's the majority of the crowd thinking? What are they doing? How would I feel like? Because sometimes, like for instance, like if I just let my normal, like not in tune trader mind, like feel the emotion when I see the chart like this, I'm going to be like, ooh, that looks bad. Maybe I should bust out my cold storage and think about selling some Bitcoin because I'm not sure right here, right? That's like my first raw human emotion. But from a trader's perspective and knowing how the markets work, I see opportunity in that fear, that of emotion that gets sparked in me. Like I understand what it means, and I understand that's logically probably how many people are thinking. So you have to come back to understanding the mechanics of the market and knowing how to read the emotion in the market. Be disciplined with your own emotion, and also think about the bigger picture. What's the market doing? You really have to understand multiple time frame analysis. especially with Bitcoin. Like this is how I've made money in these markets for the last 6 years. Is by not just being like, oh, what's this thing doing on the 5 minute or the 15 minute or the hourly, but understanding what it's doing on the weekly, monthly, all the way down to the 15-minute time frame, and realizing there's different types of trades that are going to come out of there. Like for instance, right now, this entry that we have right here, that's 8,000. Now I basically said the same thing when we got here at 78.50, but it's the same type of situation, like right here where we're at in the market, whether it was over here, a week ago, or over here this week. This zone right here, to me, on a higher time frame, is potentially the spot where where this market's going to like turn around and go up, and it's never going to visit these levels again, like never. Like this is, and I'm going to show you an example here, and it's interesting because I've been trading fractals for years, but I've been trading them with more accuracy lately, because I've been tuning back into them and realizing how valuable of information they give us as far as how the market repeats itself, as far as like human emotions, fear and greed, fear and greed. So the fractal I want to show you guys in a minute, I started realizing, okay, like for you guys that have been trading with us for SwipeCoin for the last months, you guys know that there's all different ways that I'm pulling money out of these markets by understanding how it flows, but it all comes back to structure and its relationship to Fibonacci. Fibonacci trading is extremely important to understand how the market is flowing, how it's printing these candles. So as this is happening, during this phase of the market right here, the market looked like one particular fractal that we played, and it played out exactly. We pulled Fibonacci relationships out of here to sell right here, to buy back over here, to sell up here, to try to buy again over here. Like we found relevance in there to trade that fractal, and then the price deviated away from that fractal, and then in this area, it started looking like enough of a relevance to another sequence of time where the price action was similar, enough to pull a little bit of a profitable trade out of this area. But now when we look at the market, how it's put in, okay, when I started looking at the market yesterday, like it's a thing, like I can stare at these markets and these charts all day long, guys. I mean, I'm literally like, my head is always in the charts, whether it's on my phone or whether it's on the computer or whatever. It's just like I'm always have my mind in the market, and I've been doing this for 6 years just with the Bitcoin chart. And every time that I look at the charts, even after 6 years, every time that I look at the charts with these markets, I still see new things. I still have things that I discover that I didn't see before that are more relevant today than they were yesterday. And I put all those pieces of the puzzle together to come up with winning trades. I mean, we haven't lost a trade this month. I mean, I don't like, let me knock on wood, I don't like to say that kind of stuff, but have had a really good month. Like as far as like, except one trade, the re-entry was a break even at 100 pips, came back to entry and failed. So we look for the next best trade, right? This trade here, this is the 5th trade of the month, is already up 100 pips or so. So understanding how to take the trades at the right time and what the different conditions of the market to get that information from is super important, because this is things that are helping us win, that have helped me win for years, right? So I started looking through the charts again. I started saying, okay, well, this thing's potentially breaking down here. We're deviating away from holding. It all comes back to moving averages, fractals, and Fibonacci, guys. Like really, like if I could break it down to just repetitive things that we're looking at Fibonacci, we're looking at moving averages, we're looking at momentum, and we're looking at fractals in time where we see relevance of structure, how that looks, how it played out before, because it's just a continual cycle, all right? So when I start looking at the market and saying, okay, well, this is actually deviating away from holding, let me get my fibs in here. Okay, this is deviating away from holding the 61% retracement and actually letting go of that 50 EMA baseline, right? We actually let go of it, broke down further. So I start looking through the charts. I start saying, okay, well, where else has the market on a 4-hour time frame been in a situation where it makes a rally, comes up, and then it loses that 4-hour 50 EMA, and retraces further. So we're basically looking for spots and historically where the market has made a sharp move down. Let's do it clean. The market has made a sharp move down, make some structure like this, and then we have to decide, is this a bear flag? And we're going to break down further. Or is this going to pull the Bart Simpson head out of here, and kind of rally back up, right? And just kind of reversal. So we look historically, and I'm start digging through the charts, start saying, okay, well, where else in the 4-hour time frame have we had a potential rising trend with another maybe 88% retrace? Meaning that, put my 88 in there. Meaning that this move over here, just steal that for a second, put it over here. This move over here had an 88% retrace. Okay, so all the way up and then retraced 88%. That is still a higher low. Okay, even though it looks horrible and it's 88% retracement, that is still, it's not the most bullish retracement. Obviously, a bullish retracement is going to be like a 38% or a 50. But if you're talking about still actually holding progression of price and putting in higher lows, it still is actually a higher low, right? And even here, there's some good harmonic flow where we have pretty nice reversal point there, okay, where we caught a move out of there. So there's all sorts of relevance in here for the market painting some sort of progressive structure, right? So we're looking for anywhere else in the market where after the market bounces at this point, where it doesn't hold a 61% and it goes lower, maybe potentially 88% or 78.6%. Okay, so we're looking for relationships in past. Was it 71? No, 76. Right here. Okay. So I'm looking in the past for relationships of basically how the market may have looked like this in the past and how the market may have acted, and measuring those moves that the market made then and comparing them to now and getting some sort of a feel for how the market may flow. Like, history does not exactly repeat itself in trading, but it rhymes. It rhymes over and over again. It's the same song. It's the same dance, just performed in a different way. So I'm looking through time, right? I'm looking through time. I'm looking through the charts at places where the market may have done something similar to what we see here. All right. And so I start looking on the 4-hour time frame. This is funny how this comes together too, because I start looking on the 4-hour time frame, right? And I start looking at this whole wave up that we did. I didn't really find anything, so I start digging back further in the past, looking at the 4-hour time frame here. And I start thinking about back in 2016, okay, the early stages of the last cycle. I guess, well, we'll zoom out in a second. Start thinking about back in 2016, the early stages of Bitcoin when it went from basically $166, made its first big run up, and then it held in the market, and then it continued up. I started digging and digging and digging, and I found this. Basically, right in here, how the market made a very similar consolidation triangle. Basically, after a large impulsive move up, we kind of consolidate. Everybody thinks that we're going to, kind of come out of here and keep going. And the opposite happens, right? The market sells down. Market sells down, and it has to decide, what is it going to do here? Is it going to make a bear flag and go down? Okay, or is it going to turn around and go back up? And so here I found a situation in the past where the market made a very similar structure. Very, very similar structure in the past, where we have 2 points of a rising trend after a steep fall. Okay, so there's a steep fall. The market has to figure it out in here. What does it want to do? Okay, this is all relevant, guys. This all just repeats itself in the market over and over. Here's the 50 EMA, this 4-hour 50 EMA. right? See it in there, the yellow baseline. So I'm looking now, and I'm looking for places in the past here where this initial move from trend back to trend is about 88%, okay, right in that general zone. And then how the next one that comes is about a 78.6 right in this zone, okay? So what I'm really looking at here is I'm looking at a spot in the past where the market made a low, it made a higher low, and then if you go from like the wick to wick, right, like you're expecting maybe for this market to come down in here and hit that trend again, right? But it doesn't because there's other factors of progression of price going on here, right? We can see that there is a zone that really wants to hold where this actually found support. Right here was relevant to all of this. So each structure is going to ping itself a little bit differently, but this was a very strong level of support in here after this initial push, right? So it found support in here. So after it fell back here, that was the level that held. That was the level that needed to hold, where it didn't allow itself to actually hit the trend, okay? So a lot of people were waiting for this trend line to break, for this to go lower, whatever, but it never made it to the trend, right? Because it was working off of some support, some work it had already been doing in this zone, okay, that needed to be done. It needed to hold that progression. So then I started realizing, okay, well that's a while ago. Where were we at that point in time? Because remember, I'm digging through the charts, looking at 4-hour time frames for relevance of structure. And then this is the craziest part about finding this fractal, is that when I looked at where we actually were with that fractal, okay, when I looked at where we actually were with that fractal, on the big grand scheme of things, as far as the way this thing rolls in cycles, I'm gonna have to go to a bigger time frame, maybe like a 2-day time frame, so we can see it all in the chart here. Okay. Now you guys know how I have been talking about this being the top here, this being the bottom of the cycle. And I have this, actually let me just skip over to the chart that I have it all painted on nice and pretty, because it all comes back to where we're at in the market, right? Okay, so you guys have been following me here for a little while. I have this mapped out here. This is the cycles, okay, right? Actually, let's go ahead and look at it on the weekly. Okay, this is the cycles. So I had pointed out before that Bitcoin was right here, okay, where this arrow is, right? At a point in time where it had already, just like historically, right? It hit the bottom of the cycle, ran up to the 61% retracement, retraced down to the 38% retracement. Once it got back to 38% retracement, it entered the real bull run, right? Same thing here in 2016. The market went from the bottom up to the 61%, fell back to the 38. Once it got back up here into that 38%, it opened up the door into this box, right? So then I have been saying that Bitcoin on a bigger time frame seems like it's around right about here, where if we get back that 38%, we're going to open up the door to go to like 250,000 in the next couple of years. We're going to really start the new bull run and the new phase of awareness, where the media starts getting attention, the public starts coming in, and then boom, 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 we start piling up, and we go through all of the next level of emotion. We go through hope and optimism, belief and thrill and euphoria. And all of these emotions will play out in the course of about 1.5 to 2 years, where this market should go up for, days on end, weeks on end. I mean, this is like 469 days. This one was about 550 days. So we're talking, I'm thinking, once we get into this box, we got a good 400 days where this thing's going to rally, and it's going to have more and more intensify as we go and go through these emotions, where the later people that come just keep fueling this as they see it going up, and it goes through all this with the emotional cycle. So I've been saying this for like a week. Let me get these purple lines out of here. These purple lines are actually the dates where the mining reward got cut in half. Okay, but they're not really too relevant for what I'm talking about right now, so I'll just get that one out of there. But I had been saying that Bitcoin was about right here in the bigger cycle for a while. Like, okay, yeah, we sold off. We hit the 61. We came down to 38. We lost it. We sold off. We're a little lower than average than we have been in the past, but this move also moved faster. So we look kind of where we're right supposed to be, right? But then upon further closer inspection, this move over here, right here, that point in time in this cycle is that triple bottom on the 4 hour, which is crazy, which is absolutely crazy, like how all this stuff is flowing together. Because what I basically discovered by looking through these fractals and how I've seen relevance throughout the past is that right here, let me get that Fibonacci out of there, right, back it up a little further, right here. Right here where Bitcoin did that triple bottom on the 4 hour was right at this point in time in the cycle where the market had gone up to the 61, fallen back to the 38. That was the pivot point. Like literally that triple bottom on the 4 hour was the pivotal point where the market did not sell down lower, and it then turned into a huge rally after that. So literally, like I'm looking through the charts and I'm thinking, like I've been saying for days, man, this looks like we're right about here. Like if right around this 38% on the bigger picture, if we take back that 38%, we should rally like well back over 9,000, and that should be the start of our run. Like really start, really get intensify this thing. And then so as I'm digging through the charts and I see where we're at in the market right now over here, it's playing out exactly the same here as it did here. I mean, it's almost to the point where it's like magical or just straight up strange, as far as how relevant this stuff is. All right, so basically, right where we're at for the bigger picture, like I was saying on the other chart, right here where the market needs to get back above that 38% and really open the door to the real bull run, okay, like the real trend, because this is as far as looking at larger trends and cycles, this wave up was the initial pump, basically. This is the initial move. This is the first sell-off, and then we really go. All right. So if that is really going to hold true, then we need to hold these levels and actually perform that way, right? But as I inspect it further and say, okay, how are we going to trade right here? And I'm looking in the past similarities of how we've traded. The spot that was the most similar on the 4 hour with the triple bottom is the same exact spot in the overall macro emotional cycle. Like it's insane that the market is performing exactly the same that it did on a 4 hour level. So far, I mean, this could turn around here and blow through 8,000 and go to 6,000 and be like, yeah, you thought you were smart, Picasso. That's the way the markets are. But it gives enough of a probability, right, to pull a trade out of there that could potentially be a really key pivotal point in the market. All right, so understanding this, and now let's break this down here on even a 4 hour time frame. Let's do it like this. Let's break this down to a 4 hour time frame. Where'd my chart go? It's gonna take a minute to load. Here we go. All right, so I'm going to get rid of all that on the higher time frame stuff and just understand where we are at in this little move, right? Like this is really what we want to study. How did the market perform right here, right? We know where we're at in the bigger picture of things as far as the way this thing moves in cycles and how it makes that first wave of disbelief up to the 61% of the entire cycle and then falls back to around the 38%. Once it gets back that 38%, it really rallies, right? So we know that. We've seen that historically. So how did the market perform here, right? How did the market perform there? So let's study it. Let's look here. Okay. Okay, now I'm going to pull up where we're at right now on a 4-hour time frame. And let's see how this plays out. All right. So here we're looking for the same things, right? So I was looking for the same type of situation. We got a low, okay, a little bit of a higher low right there, where if we are, like everybody's looking at this trend line right here, right? Everybody's looking at for this to break. Everybody's looking at this to either to break or buy in a sense. But that the market never hit the trend. That's why I was, I could have put the signal to say, hey, let's buy at 7,900, but I really didn't think we were going to get there because there was enough of a chance for it to hold 79,58,000 based upon previous work that had been done. Okay, previous wicks. Price has memory. All of these wicks in the past are going to be relevant to where price may go in the future. Like straight up, there's no denying that. That gets back to straight up levels of support and resistance and previous points in time of actually price action. These wicks in this zone is very much relevant to why the market bounced right here and did not hit the trend. Okay, but the fact that it did not hit the trend and where we're at in the whole overall cycle of Bitcoin, that's why I'm kind of like really watching this trade, because if this thing, I'm not too worried about this 100 pips right here. It's a great move for sure, lock in some partials, but I'm really looking for the bigger move to come out of here, right? Looking for the bigger move. I'm looking for the 1,000 pip swing, or even like I've been buying Bitcoin underneath 8,000 for long term. Like as far as like I bought Bitcoin around 4,000 when it broke out earlier in the year. I bought some here around under 8,000, and I will buy it if we break down and go to 6,000 for the bigger picture, right? Because I'm trying to build a little bit of a position for the next 2 years. But as far as here, this was the place to say, okay, yeah, I'm going to buy a little bit more, right? So if this does not break down lower than here, if we don't come down there, this point in time holding is going to be just as important as this point in time holding for it as it did in the past at the same point in time in the emotional cycle. And that literally would be the pivot point that of where this thing from here, look what it did afterwards. It made a nice strong rally up, and then that was it. That was like literally from there, it was just uptrend, uptrend. Definitely some nice pullbacks that we can, we'll have volatility to play. But the overall picture from there was just up, 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 all the way up to 20,000. That was when Bitcoin was $560, $570. So basically, the way that Bitcoin just performed at 8,000 is exactly the way that Bitcoin performed at $570. And after it performed that way, we never saw $570 again, ever. Goodbye, gone. So looking back on how the market's playing out, like a year from now, we may look back at this particular trade, because there's some trades for me when I stare at these charts for long enough and I understand how this all moves on different time frames. And there's some trades for me that are like normal or boring, like not boring, but like every trade is interesting, right? But some are just boring, like, oh, it's at resistance, let's sell, or oh yeah, it's going to get some momentum. But other trades are really exciting, because and this to me is a very exciting trade, because this could potentially be the same as buying Bitcoin at $570. So just think about that, right? What would you have done if you could have bought Bitcoin at $570? As that trend intensified and it went all the way up to $20,000. So And just think about and to put it into perspective, think about after this point in time, okay, back then in 2016, Bitcoin had gone from, to get to this point in time, Bitcoin had gone from $166 all the way up to 790 or something. Okay, so it went almost like 6 times in price, right? It was like $166 and it went almost to $800. And then it came down here to about 570 and it held, right? At that point in time, nobody really thought like a number from this point in time at 570, a number as high as 20,000 seemed absurd. It seemed absolutely absurd. Like at this point in time, even traders like myself are thinking 8,000, 10,000. This thing could grow to. But to go to 20,000, it blew all of us away. It was like, wow, this thing just went crazy, right? So just think about it. I'm trying to like lay the comparison in your mind right there. Like right here, Bitcoin at $570, it grew to $20,000. So the same type of growth from 8,000 to get to 250,000 is almost exactly the same type of a jump in percentage. So it's not absurd considering that this thing could go to 250,000 from this point in time at all, based upon how it's acted in the past and how much this thing could grow. So, well, obviously tracking this thing, but the way that I think that this thing is going to perform here, and if it doesn't, that's the thing. Like this is the best part about trading. It's like reading a book and be like, oh, this is a great book. I want to read that book again. And then it gets old and tired. You throw it away and you don't ever look at it again, right? So it's like this. You play a fractal and you'll be like, hey, this is great. And if it doesn't work, it'll work out. It'll be great. You'll look for similar fractals. If it doesn't, you'll be like, whatever. That one didn't work out. Let me go on to the next trade. So it's like, you just play what the market gives you. You always got to be flexible. You know what I'm saying? But for me, looking at where we're at historically, looking at how this market is performing right here, I'm looking for this move that we just got here at 79.50 area. I'm looking for this over the next coming week. First sign, okay, the first sign would be a nice jump, a continuation in here, maybe a little bit of pullback, whatever. It could even tap 8,000 again, but then a nice move back above that 50 EMA. Okay, you see how that 50 EMA, even on this picture, is flowing right there, right? The market was under it right here, bounced, got above it. Once it turned into support again, boom, right? So we have the same thing here. That 50 EMA is flowing through time, right? Flowing through time. The market dropped below it. We just caught that bounce, just like over here, okay? So now what do we want to see down here? We want to see the market get strong above that 50 EMA on the 4-hour again. And once it has enough candles and actually show support there above that 50 EMA, boom, it should do the same exact thing and just jump because we're above average again. We're trending up. People are like, oh man, this actually looks like it's going to go up now, and people start to jump in, and traders come, And then looking back, more and more people will jump in and be like, oh, that thing held a triple bottom. Basically, it's going to be, if that hole is right there, it'll be looked at the same way it got looked at over here, where the market held some sort of a triple level of support in that 550 area, right? Back in time, it was here. It was like 550. Here, it's going to be, basically that 79.50, 8,000 area where the market found support and continued on and printed higher lows while it was doing it. Okay, so these fractals right here, this is the beautiful thing about trading. The more that this chart prints itself, the more fractals you're going to have relevance in the future of how you're going to be able to trade, because it all is just repetitive structure, again and again and again. So how this plays out from here, we want to watch key elements, right? We want to clean this up a little bit. We want to see that the market flows in the same way. Okay, get above that 50 EMA on the 4-hour, and that's why I lay out my take profits like I do. Okay, because if I'm expecting that move to come up there, back up to, let's say, 8,400, actually should go around to these tops. This move up here should exceed these tops to actually show higher, to print higher than it did over here. So that means that this comes up here, it should print higher, slightly higher than here. So 84.75, we're safe to get out, let's say 8,400, right? And see what the market wants to do. So take profit 1, right there, 8,400. That's how I get my take profit 1. Take profit 2. Where's the next logical level it's going to hit resistance? Boom, right? These tops right here. This top right here, these tops right here. What is it? 8,700. Okay, take profit 3. If we can make it past there, I'm looking for that tag of these lows. Basically, it's really 93, but I put 9,000 just to be super conservative. Because at that point, it's already a 1,000 pip swing. But just know that if we start to really come up here, we could easily go an extra couple hundred pips for sure. And there would be more trades in there. But you have to understand, like I said earlier in the session, there's only so many times the market's going to give you that nice entry, right? And if you don't work that nice entry to the maximum advantage by having multiple positions, you're stuck looking for something else to do, or might get back into the trend, but have temporary drawdown, instead of being profit and just letting the market work itself out. So those are all things that come with time, but being able to read the market like this is crucial, because with this knowledge, you can take it and apply it however you want, right? Literally, there's people that are going to come in here and be like, yo, just off of the fact where I know this could bounce 100 pips, I'm going to go all in and work that 100 pip move, you know what I mean? And other people are like, yo, this is a good time to invest in Bitcoin. Maybe I'll put some of my extra money into Bitcoin here and not worry about it till 2022. So there's all understanding this information. Everybody is going to utilize it in different ways. And that's the beautiful thing about it, is that there's so much value in that, right? You can day trade this, you can scalp it just right off of here, knowing that this thing could bounce right here. You could high frequency trade that thing on the way up every 3-minute candle, right? Just knowing where you're at going on a 4-hour time frame, the direction that you shifted in, and why. So there's just, it all, hopefully over time, you guys watch my sessions, because I don't watch anybody else's sessions, so I don't know how other people teach. But hopefully you guys are starting to get the flow of understanding my thought process here, because I'm looking at this market first and foremost of what's the emotional state of the market. Literally, what's the emotional state of the market, and how's the market printing itself? And let's look back in the past for another point in time that's relevant when the market was emotionally in the same situation. So here, this is what we're looking for. All right, we're looking for that move up above the 50 EMA, support above the 50 EMA, because here, and you have to think about how that market, why the market's doing that, right? Look at the picture on the top. Let's look everything that led up to that point in time, right? Right here, where the market falls off. What does it do? It loses that 50 EMA baseline, right? It loses. It can't really open and close candles above it. Let's look at the line chart. Yeah, there's really no opening and closing above that yellow line, right? So that 50 EMA turned into resistance. Okay, and that's why the market right here snapped and went down, because the 50 EMA was resistance at that point in time. Let's make that bigger for a second. Look at history here, right? Okay, so the market could not open and close above that 50 EMA baseline. It broke down, right? When it came down here into consolidation, it made a move above it, couldn't hold it, went down below it, right? Made a move above it, couldn't hold it, went down below it. Made that next last move above it. Once it found enough support there, boom, that was it. So you have to understand how the 50 EMA is super important on all time frames. I would say if you have to a lot of moving averages are important in their own ways, but the one that I keep on the chart all the time is the 50 EMA, the exponential, because it's a great baseline for all time frames. I mean, we work off of it on the 15-minute chart. We can see our current situation with Bitcoin even on the weekly. Our whole reason that this market is finding support right now is all based upon the fact that right now the market found support here on the 50 EMA on the weekly. Right? When we look at the candles, there's 1, 2, 3. What's that? Even almost 4 now. So the market looks like it has shown that for at least for now, it's showing support here around that 50 EMA, right? So that 50 EMA is super important of a baseline, right? So when you're watching the progression of price, that's a key way to know, are we going to go further? Are we going to go higher, right? And that in itself, it will present other trading opportunities, right? Because like right now, yes, this is the best entry right here in this green belt that we got to just sit and let the market do what it's going to do, right? The next move that I would really be waiting for here, okay, is on a 4-hour time frame. I'll break this down for you guys on a couple different time frames. On a 4-hour time frame, I think the next swing entry, okay, the next swing entry would present itself once this market did come up here, maybe even up to here, and retrace a little bit and kind of put in some work around that 50 EMA baseline. And then whatever lows that it puts in here around that 50 EMA baseline, I would be watching the 4-hour momentum to shift back up, showing me that we could grow, and I would look to buy based around that 50 EMA baseline becoming support, and I would keep my stop loss at that point underneath of the 50 EMA baseline, right? So expecting the market to progress up here, consolidate, and then put support at the 50 EMA baseline, that would be a potential another place that I would look for a swing entry, right? Because at that point, at the 82.50 mark, you still got a nice swing to 8,700, 9,000, whatever, right? So you still have it, even from here, you got 1,000 pip swing ahead potentially. So there's no rush. Like if you miss the entry down here, the swing, I wouldn't be looking to swing it and buy it in here, because we're too late. That's what I'm saying. Like, you guys will learn this over time. For swing entries, you want ninja entries, right? Because you just want to sit and play the game, let the market do what's going to do. So here's a good ninja entry. If the market wants to come up here, consolidate around that 50 EMA, there's your next entry, right around that 50 EMA once it really does show support before another large move up. Okay, we're leaning up, right? Like higher time, like this is more than just a 15-minute move or a 4-hour move. This is like a weekly, monthly, 4-year cycle type of a move where if we hold in here, we're going up and we're going up and we're going up and we're going up and we're going up. So, it's all about tracking that progression and looking for the next best place to squeeze in the market or jump on the train, right? For a swing. Now, if you're not going to swing it, then you kind of just go with the idea that, all right, well, we have an established trend now, right? If the market's going to move from here up to here, right? Or even let's say here up to 8,400, right? So 300 pips, maybe more to the upside. If it's going to do that, it's going to have to show some sort of a trend, right? Let's look at the 5-minute chart. What's it doing on the 5-minute? Whoops. And you just play it however you want to play it. 5-minute looks a little bit like we got a little bit of a trend starting here. We can even pull that maybe back to here. Let's pull this back on like a 15. Okay, we have a trend starting up here like this, but it's a little steep. I don't necessarily trust it because we're also running into this resistance here. Okay, so we got some resistance here that we're running into, right? But this market should be progressing. It should be coiling up. So I'm looking for something like this to happen. Like that, right? For this thing to coil up below the resistance level in here and then create some sort of ascending triangle or some sort of ascension in price where we could potentially play a 15-minute move based around it maybe coming back down to that 50 EMA baseline again, right? As long as we don't really, let's see, where's our, okay, see I have my 4 in here also, my 4 moving average, just put it in here now, this green one here. As long as we don't really see this, let's just hide price. Okay, Now I just have two averages up here, right? I got that 50 EMA baseline, and I have my 4 moving average as well. As long as these two flow nicely together, price can come down here and it can test that 50 EMA. And that can be a baseline of support. If we see the green one kind of come down here and cross, then we may do a further correction. Because if this crosses and the momentum shifts in the market, then we're going to have a scalper entry present itself. So it's all about the tracking the flow of price and momentum, right? Like that's what I said. It all comes really back to how do you want to trade? You want to be a day trader, swing trader, scalp trader, high frequency trader, right? Like you can like use this information for anything. So if you're gonna just look for a quick day trade out of this now, just know that on the 4-hour, daily, on even the higher time frames are leaning like this could be a potential pivot point to go up towards 8,700 or so now, right? 84, 85, 8,700, let's just say. So let's look for a lower time frame trend, right? Let's look for places to buy the dip on the lower time frame as close as possible to the baseline of price. And then in here, like I wouldn't buy this thing here. I would wait. We got 1 o'clock. I would even wait. See, I don't know if I'm telling you that I would wait until 2 o'clock because I have a swing trader's mind because I know a new 4-hour candle opens at 2 o'clock. But I guess it just comes with the flow, right? But I just know from experience that there'll be more data here that'll give me a clearer read if I wait till about another hour, right? Because at that time, another hour from now, I'm getting a new 4-hour candle. There will be a new 4-hour candle that will print, right? So then this is where like my mind is always thinking multiple time frame analysis. And they'll put this piece of the puzzle together for you too, right? Look. So we just looked at that on a 15-minute time frame, right? We just looked at a 15-minute time frame, and we're looking. Let's go back to that for a second, right? We're looking at where we can maybe squeeze into this market if it's going to go to the upside, right? So let me look here from the bottom. Let me draw this trend. We see it's got some sort of a trend here. If it held this trend, that would be actually more bullish than I think at this point in time. I would think we got a little bit more consolidation because, like I said, we're running into that resistance. So I have a couple things going on there on a 15-minute, but there's also a new 4-hour candle coming in an hour. And so we want to look at it like this. Okay, if that 4-hour candle, the next one that comes, how's it going to look, right? Is it going to come and just, boom, go right up? Is it going to be that strong? Is the momentum in the market that strong that boom, we just go right up? Or is that 4-hour candle going to give us a little bit of a red and kind of wick down maybe even to here and then go up? So you got to be cautious. That's what I'm saying. Like here's the best point in the market, right, to get in here. Because if you're playing around in here in the expansion, there's volatility, right? You could do whatever. It could chop you out. So 15-minute entries now, I would really wait to see what that next 4-hour candle wants to do. Does that next 4-hour candle want to come in and start to look bearish and start to sell off? And is it going to put in a low? You can kind of read those things. Like there's even a saying called "bang the close" that you guys could Google. It's like where it's known that like right before big candle closures, 4 hours, dailies, even weeklies, there's a lot of volatility where like the price boom gets banged in a certain direction right before the close or right after the opening of certain time frame candles. So 4 hours are very popular, mid time frame candles. So I would really be watching what this next 4-hour candle wants to do. And if that 4-hour candle puts in a low, that's the low that I want to buy on a 15-minute time frame, right? So let's look here. This one already put in a low here. So it looks like this one put in a low and tested that wick right around that area and this low. So this one that comes open after here, let's read our momentum. What's our momentum doing? This momentum's looking like if this crosses here, it could grow a lot. It could grow from here. All right, a lot of momentum could grow from here on the 4-hour time frame. Stochastic RSI up, strong. Okay, we're looking strong. RSI. What's this I see? That's an RSI trend breakout right there. So even though price, look at this, momentum of the market. I'll put this in here like this for a second. The momentum of the market is broken from its range, and actually here did not hit the trend and put in a lower low. Now it's not lower than here just yet, but this is progression where we see momentum leading price. The fact that this RSI has kind of poked its head out of this little trend right here, the fact that that's poking its head out like that is almost like a pre-shadow of this right up here crossing and getting strong, and price next 4-hour candle potentially just blasting off. Honestly, it could potentially just blast off because the momentum is building. Let's look at other our OBV. Let's see too much here, but what I do want to point out on the OBV is the 2-day on balance volume. Thinking about where we're at in a higher time frame, like I was saying, if we actually pivot right here, right? Okay, if we actually do pivot right here off of this, right? If we do pivot off of that, like we pivoted off of this in the past, okay, then on a higher time frame, we would see some sort of a hint telling us that if we could go like this, right, all the way up to 150, 200,000, there would be a lot of room to grow, right? We would see some sort of some pattern that maybe with momentum that we would be entering into a new phase or something, right? Look at our 2-day on balance volume. If the on balance volume, if we actually do turn up and this on balance volume keeps growing and we do get, and that is the pivot point, man, this is telling us right here with this OBV that this is setting up to break out and really grow. Really, really grow. All right, so there's so much going on here on all these different time frames. Everything's pointing up. I mean, even look at our 2-day. Looking like it really wants to turn around here. 2-day RSI. Almost the same thing I did in the 4-hour, but we haven't broke just yet. So, in the next couple of days, if we see the 2-day RSI, if we see price jump up towards like 8,000, or even basically, I would say it would be like this. If we see price jump up towards like 8,700 and get strong on that 4-hour and get strong above that 50 EMA again and really like take off, then most likely on the 2-day level, we're going to start to see signs of the 2-day RSI creep out of here and kind of creep out of this little holding pattern and show us it has a lot of potential to grow as well. So higher time frames are basically, this is the 2-day RSI and I showed you the 2-day OBV. Both of those momentum indicators are showing us that they're really close to breaking their structure and showing they have a lot of room to grow. So higher time frames are lining up for this to actually really be that pivotal point right here. Okay, oops, that's not what I wanted. All right, so lots going on there. Super exciting moment in time here for Bitcoin. Right in this zone, okay. Drop back a little bit, but like I said, I don't think that that's too much because we just have some work to do in here still. So maybe even like something like this. Right in here we may see, which totally would make sense to get a nice hourly test of those tops. Really test that. So don't be surprised if it drops back to 8,026. Would it still be on point for the bigger move? Yeah, because this thing moves in ebbs and flows. Like I said, I don't like to take many entries in the market, so I'm still safe right down here at 79.75, even if it comes to 8,026. So all in how you want to play the market, how many trades you want to pull out of the market, what kind of trader you want to be. But understanding this analysis, guys, is really life changing. This will really, once you understand how these markets are flowing, you will really start to become a successful trader. Let's see what else we got going on here. Yeah. The strength of this thing, though, I would not be surprised if this did something like this. Bang. I wouldn't be surprised at this point. Because this point, it needs to do that. Like, we need to really reject that point on a daily level and give a nice strong candle. Like, where we get out of here with a strong candle. But remember, that 200 MA on the daily is a kind of like a resistance right in here right now. Right through here. So, but once we get above here, it's got a lot of work to do yet, but slow. We're starting to see the baby steps, good signs, good points in time where the market seems to be repeating itself, same emotional structure. Whether it works out all the way to where this was the pivot point where it goes higher from here, almost still remains to be seen. But it gives enough of a probability there to pull a really good trade out of there and have a lot of room to play. All right, guys, so that's my session for today. I'm going to go ahead and see if I see anything in here. Yeah, I wouldn't hold long-term positions on leverage. For leverage trading, like for a MetaTrader 4, I don't hold a position more than like 7 to 10 days. You're better off trading on the exchange itself. Yeah, if you're gonna trade a MetaTrader 4, you gotta swing it or scalp it, right? Leverage trading is more for swings. Swings 7 days. Like I said, 7 days, 10 days tops. 3 to 5 days is the sweet spot, really, for a nice swing trade. But for like bigger moves, nah, you gotta like use less. But the thing is even the swap fee, yeah, that would hold open trades 3 days. It's different for different pairs. Swap fees are different for different pairs. It is all. I'm not sure exactly how they calculate it, but it's based on your position size and the pair. I mean, I've actually held a position open for almost a month where the profit far exceeded the swap fees, but it's like each way of trading is like a tool, right? If we want to like use high leverage, you don't want to hold the positions too long. But some of these Bitcoin swings will go like 2,000 pips in a week, so a week is worth a hold, but 3 to 5 days is really the sweet spot. All right, everybody, thank you so much for your time. So we're buying. I mean, I bought. We bought. Swipecoin is already in the trade. I would not recommend jumping in unless you are buying the next fear, right? Let's mark that. 8,025, I would give it a shot, right? Guys, we'll see you again on Tuesday. Have a great weekend. Yeah, let's keep catching pips through the weekends, guys. If we